Hey everyone, Sherman the CPA here. Today I want to help you save on taxes by giving you the top 5 tax write-offs for LLCs this year. Time and time again, I see business owners pay higher taxes than they actually have to because they fail to take one of the tax write-offs that I'm about to share with you. And if you stay until the very end of this episode, I will share a bonus tax strategy with you that can substantially reduce your taxes. And if this video helps you at all, please do the world a favor and share it with someone you know who may benefit from it. And if you want even more ways to save on taxes, make sure that you like this video and subscribe to our channel. Tax write-off number 1, vehicle expense deductions. A lot of people are hesitant to write off their business vehicles, but here's the thing. If you use your vehicle for your business, then you are allowed to write it off on your tax return. A business purpose for a vehicle might be using a vehicle to drive to other business locations, like locations where you might meet a client, an employee, or a business partner to discuss business, render services, or deliver goods to your customers. Now, if you use your car solely for business purposes, then you may deduct the entire cost of the car up to the annual depreciation limit set by the IRS. And if you use your car for business and personal purposes, then you may deduct the portion of the expenses associated with your business use. For example, if you use your car 50% of the time for business purposes and 50% of the time for personal purposes, then you may deduct 50% of the vehicle cost up to those depreciation limits. Now, there are a few ways to deduct your vehicle expenses. You can deduct business miles, or you can capitalize the vehicle as an asset and depreciate it each year. And if your vehicle weighs more than 6,000 pounds, you can take bonus depreciation and deduct the full cost of the vehicle in the year you placed it in service. Tax write-off number 2, business travel. You may deduct 100% of your business travel and lodging expenses. The key here is to make sure that there is a business purpose for the travel expenses that you incur. A business purpose for travel may be to attend a business conference, seek out potential business, or meet with prospective customers. Now, in order for your travel expenses to be deductible, you will need to conduct business each day during your travel. The travel expenses you incur on days in which you did not do any work for your business is not tax deductible. So if you want to deduct 100% of your travel expenses, try to do some work each day of your business trip. Tax write-off number 3, the home office deduction. If you do any work in your business from home, even if it's just administrative work, then you should look into taking the home office deduction. All homeowners and all renters qualify for the home office deduction as long as you are using it in connection with a business. This deduction allows you to deduct certain home expenses like your mortgage interest, property taxes, insurance, utilities, Wi-Fi, repairs, and even depreciation from your taxable income. All you have to do is use a part of your home for your business, and you can deduct the portion of your home expenses attributable to the part of your home from your tax return. To do this, you would divide your home workspace by the total square footage of your home and apply that rate to the applicable expenses. For example, if your home office takes up 15% of your home, then you can take 15% of your home expenses as an LLC tax write-off. Tax write-off number 4, tax your LLC as an S corporation. This is more of a tax strategy than a write-off, but look, this is hands down one of the most powerful ways to lower your taxes as an LLC. Here, you can simply choose to tax your LLC like an S Corp, which will allow you to avoid the 15.3% self-employment tax. Now, as an S Corp, you do have to pay yourself a reasonable salary, which is subject to 15.3% in Social Security taxes and Medicare taxes, which includes both the employer and the employee portion. However, since the reasonable salary you pay yourself will likely be less than your business income, this means you will pay a much smaller portion of those taxes. For example, as an LLC, you will pay $15,300 in self-employment taxes on about $100,000 in business income. But as an S Corp, you would only pay these taxes on your wages. So if your business earned the same amount of income, but you paid yourself $30,000 in wages, then you would only pay about $4,600 in similar taxes, which is just 15.3% of $30,000. So you would save over $10,000 in self-employment taxes by switching to an S corporation under this scenario. To learn more about the benefits of an S Corp, then make sure you subscribe to our channel and check out my full video on this topic. Tax write-off number 5, cost of labor. One of the biggest mistakes I see LLCs make when they file their tax returns is failing to write off their labor costs, which include the cost of employees, contractors, and vendors. If you pay anyone to help you deliver a product or service specific to your business, then you should take the total expense as a tax deduction. Now, in order to do this, whenever you hire a contractor, make sure you ask them to complete a W-4 form. You will use this form to prepare a 1099 at the end of the tax year, which basically reports the money you paid to the contractor to the IRS, requiring them to report it as income on their tax return, but also allowing you to now deduct it as an expense on your tax return. The same thing applies for employees. If you hire employees, make sure they complete a W-9 form. Typically, your payroll provider will do this for you, and they will be issued W-2s at the end of the year so they can report the income you paid them, and then you can write off the expense as a deduction when tax time rolls around. All right, so here is my bonus tax write-off, the 20% pass-through tax deduction. If you operate a sole proprietorship, partnership, LLC, or S corporation, then you are a pass-through business. This means that you may be eligible for an automatic 20% deduction from your business taxable income. So if you made $200,000 in business income, then you could hypothetically write off $40,000 and save taxes on the lower amount of income that you would be reporting. And if you were in the 27% tax bracket, this would mean you would save over $10,000 in tax expenses by just checking the box for this deduction. Now, there are some eligibility requirements to take this tax deduction, and I have a full video on our channel that discusses this in detail. So again, make sure that you are subscribed to learn more about this.